Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Monday, June 7th, 2010. This morning we're talking about who's buying, and I'll get to that in a second, but just wanted to say that it's a good thing that we made it through the weekend without any further landmines going off over in Europe. That's always a consideration and always a problem. Now, on Friday we heard about the deal with Hungary, as well as the bad jobs numbers here in the U.S. That sent the market into almost panic mode, into risk aversion over the weekend, because they were afraid something might happen while it was closed over the weekend and we'd be in big trouble. Well, that didn't happen, so things appear to have stabilized a little bit. Now, over the weekend, G20 leaders and ministers met to discuss how to take care of this global economic problem that we've got, and you're really seeing some conflicting views happening there. Okay, countries such as China and Germany, which have these budget surpluses, okay, are really looking for countries that have budget deficits to do something about their debt, to take on austerity measures. The problem with that is that all of a sudden, if everybody takes on austerity measures, who's going to spur domestic and worldwide demand? And that's going to be a problem going forward. Right now, what we have is it looks like everybody wants to devalue their currency to try and export their way out of problems. But if everybody's exporting and there's no demand, who's going to buy the stuff? And that's one of the issues. And actually, that's something that Secretary Geithner brought up. He said, don't expect the U.S. consumer to pick up the slack in world demand. I mean, for a while, it's been the Chinese. They've been running hot and they've been buying up just about everything. But that's the model that they've had with the currency peg has allowed them to do that, okay, because their currency receives an unfair advantage over other world currencies. And the same could be said about what's happening in Germany. I wrote an article back. You can check out the blog called "What is Germany?" Namely China and Germany, and they're countries that have benefited with their exports due to a little bit of currency. I don't want to say manipulation, but definite currency advantages. Germany had a captive market in the rest of the Eurozone countries by having a stable euro price that allowed them to export to these countries, even though the euro was typically higher. So that's what happened there, and of course we know about the Chinese yuan peg to the dollar, which allowed them to stay artificially low as well. So that's what we're seeing in the market. So the market starting out, it was a little bit concerned about this. We started out seeing some risk aversion, but it looks like we're off the lows started earlier. Now the Aussie's a little bit higher off its lows, but it's still down from Friday's close. And this is all due to these European debt fears and what's going on with the G20 and how they're going to come up with a solution. Just real quick, the loony's actually higher. Oil prices have rebounded a little bit. I believe it's up to around 71.5, but it looks like we may be reversing a little bit here. So we're going to have to see what happens if there's going to be some risk taking in the market today. Euro, let's take a quick peek here. Got as low as 1.1875, say, before bouncing back a little bit. The trend here is still clearly down. We're looking at the 4-hour chart. I expect to see an orderly decline of the euro. Now, a lower euro is actually good for the European economy. I mean, I've discussed this before about how it's going to encourage manufacturing, encourage exports, and also tourism to the countries that don't really export much. Think about the pigs nations. Okay, and sure enough, what happens? We see that there was a reported growth in factory orders in Germany. All right, they were expecting to have a decline of 0.4% in factory orders, and they actually got a gain of 2.8%. So that's a huge number right there. So that's a good thing for the Eurozone. They need a lower euro in order to be able to recover, take some of this pressure off some of these countries that have these debt problems. Okay, the pound is higher today, despite the fact that new UK Prime Minister Cameron said the deficit situation is worse than feared. All right, and basically he's picked up the politics of the U.S. here, blaming the prior administration for the problem that they're in. Yep, we get it. Everybody in the world who was in charge 4 years ago contributed to this mess. Now it's going to be how you go about fixing it. So this looks like it's going to be some budget cuts in the UK, as well as some increased taxes, but yet the pound's trading higher, and the basic sentiment as well. At least they're not the euro. So that's what we're going to see from the pound as well. Dollar's mixed. You can see it's a little bit lower here versus loonie, but it's coming back a bit. Higher versus Aussie. Just flipped to negative versus the yen, which means we're looking at a little bit more risk aversion this morning. We've seen this typical pattern before, though, where in the overnight session, they sell the euro and they buy the dollar. There's risk aversion, but as the U.S. market opens and things appear to settle down, the dollar gradually loses its value as the appetite for U.S. stocks gets higher. So that's the pattern we've been seeing. Whether or not we're going to follow that today, I'm not certain, but it looked like that earlier. We're going to get U.S. retail sales figures out on Friday, and that's going to give us an idea of the health of the U.S. consumer and whether or not they're going to be the ones to pick up the slack. Next, I just want to take one look at dollar yen here. It's official. The former finance minister Khan is now the new prime minister in Japan, and we've talked about his weak yen policies, which are intended to stimulate economic growth and help Japanese stock. All right, but nevertheless, the yen traded at an 8-year high versus the euro. Let's just take a look at this here. Let's look at this on the weekly chart. Let's go back 10 years. Okay, you can see right there. Going back, that this is at a 8-year high to the euro. So we're going to have to see what happens. But they've got their trade balance figures out later this week, as well as GDP figures. So every day the markets can make it through without one of these European landmines going off is a good thing. We still got a long ways to go in global recovery, and you can see how it's going to take global cooperation in order to really make that happen. But you can see that the areas that have benefited from past policy, namely China and Germany, are very reluctant to make the changes necessary to help the entire globe. So how that's going to play out is anyone's guess. We could see some potential defaults here or there, or what's going to happen is uncertain. But if we continue on this current path, we are going to continue to see these great imbalances that have plagued this market. So I expect these markets to kind of chug along. Euro trend is still down, and it's going to continue to go, hopefully at a slower pace, but if we get some of these euro landmines, it's definitely going to accelerate the pace. There's still considerable risk in the market, so don't lose sight of that, even if we start to get some decent economic figures coming out from around the globe. So that's what we've got for today. Good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.